Hello, everyone. Welcome back to Financial Path. Here is some excellent news. On Monday, July 21st, 2025, the silver spot price surged to a 14-year high of $39.25, the highest since August 2011, when the silver spot price was $41.76. This increase followed investors flocking to safe haven assets amid the escalation of U.S. trade tensions. But what does the 14-year high really mean for the silver market? Is this the beginning of a new era for silver, or is it just a fleeting peak? I have done another video previously in June 2025 titled Why 2025 is the Best Time to Invest in Silver. In that video, I clearly described how the current economic situation has created a favorable environment for silver investment, and that the financial situation will ultimately benefit silver in the long term. The advantageous context will unavoidably push the silver price to a new high level. The situation created an imbalance in the silver. As long as the imbalance persists, the silver price will continue to rise until a new equilibrium is established. Regarding the direction of the silver price, analysts had made a prediction earlier. However, with the favorable situation emerging, speculation about the silver price movement begins to fly. As you possibly know, the silver price has many references. Some analysts use XAG-USD for their analysis, while others apply CFDs. Some base their silver price analysis on COMEX futures contracts, while others may use spot physical silver prices directly. However, regardless of the names they give to the instruments, they share common characteristics. That is, they all base their value on the underlying physical silver price. Therefore, in the next discussion, no matter what silver references they use, we assume they are all referring to the underlying physical silver. The silver price $39.25 in 2025 will approximately equate to $56 in 2011, accounting for the inflation factor. This means that if the silver returns to a similar level, the price should be around $56 reasonably. Mike Maloney in Gold Silver predicted that $10 move from the current levels would come soon. He further indicated that the $50 level was a psychological resistance level. Once silver breaks above $50, there's no historical overhead resistance to slow the ascent. Some experts provide more detailed predictions of the possible silver price based on the current and future situations that silver faces. The prediction spans the short term to the long term, portraying a positive outlook. They forecast the $40 per ounce level represents the next significant psychological barrier, expecting a test of this level in the near term. $50 per ounce is projected as achievable within months. This would represent a return to the 2011 peak levels. Price acceleration is widely expected once silver breaks through the $40 level, potentially creating a parabolic move similar to previous silver bull markets. The current rally exhibits different momentum characteristics than previously anticipated, with stronger underlying support and reduced volatility. In the precious metals world, investors often see silver as a proxy for gold. That is because they previously only treated silver as a safe haven asset like gold. Therefore, investors invest in silver, believing it has value primarily as a hedge against inflation. However, with the development of technology, silver has increasingly demonstrated its industrial value. The industrial demand is driving the silver price to rally, with its characteristics that differ from previous expectations. Due to this reason, beyond immediate price targets, the long-term outlook for silver is more bullish, as shown below. Experts confidently project that silver could eventually reach about $100 per ounce at some point. According to Bloomberg data, silver rose approximately 400% from its base between 2010 and 2011. A similar percentage move from recent lows would take prices well beyond $100. In addition, silver's all-time inflation-adjusted high from 1980 would equate to approximately $140 in today's dollars, suggesting significant upside potential remains despite the recent rally. Current silver squeeze market trends indicate continued momentum in this direction. Even more optimistic long-term silver advocates suggest that we could be witnessing a historic repricing event that would push silver to $250 or even $500 per ounce, up from today's level. Additionally, some analysts continue to use the gold-to-silver ratio, GSR, as a predictor of the silver price. However, GSR is lagging, and at the same time, silver differs significantly from gold in terms of its properties today. More than 50% of the silver function is no longer in the monetary aspect, but in industrial demand. Therefore, I disregard the silver price prediction made from GSR. As an average investor, I am not sure where the silver price can reach or how far it will go. However, I can see the current situation that the silver is facing, and I can predict what could happen to the silver further if this momentum continues. The momentum created an imbalance between the demand for and supply of silver. As long as the imbalance persists in the long term, the sole solution to the imbalance is an elevation in the silver price. Experts recognize the point, so they make the above prediction. Then, what on earth causes the structural demand and supply imbalance? I made some analysis in my June 2025 video. Now, let's break them down further. Then, why are those experts so optimistic about the future silver price? If they really make such an optimistic projection, this indicates that they believe the imbalance between supply and demand will persist in the long term. After all, the relationship between supply and demand is the sole force driving up the silver price. Other factors merely affect the process but can't change the trend. Regarding the topic, I provided a relevant description in my previous video. Let's review it and get a more profound impression today. Today, when speaking of the silver demand, it includes two aspects. One is investment demand, and the other is the industrial demand. In the past, investors purchased silver primarily for the same purpose as gold, to preserve value and protect against inflation. In this case, silver mainly serves a monetary function. However, it doesn't receive the same treatment as gold in terms of investment demand, and it is merely considered a proxy for gold. The situation has recently undergone significant changes due to shifts in technology and the global pursuit of sustainability. The change and development have resulted in silver playing an increasingly important role in the industry. According to the table, silver industrial demand increased from 45% in 2015 to over 55% in 2024, while investment demand decreased from 35% to 28% during the same period. Therefore, historically, investment demand dominated silver's price narrative, with industrial application playing a secondary role. Today, the relationship has undergone a dramatic inversion. Silver now responds to both macroeconomic and financial conditions, as well as industrial growth cycles. This dual driver creates a more complex but potentially more robust price foundation. This transformation will have profound implications for the silver price discovery, as industrial consumers typically exhibit less price sensitivity than investors. Then, with the technological development and shift, which fields will increase their demand for silver applications? Renewable energy mainly refers to solar energy systems. Silver plays a critical role in photovoltaic (PV) systems due to its unmatched electrical conductivity and durability. The main part is the solar panel. Silver paste is screen printed onto the front and rear surfaces to form the electrical contact that collects and transmits the electricity generated. Each solar panel contains approximately 20 grams of silver on average. The International Energy Agency forecasts that solar PV capacity will reach 3,500 gigawatts by 2028, increasing more than threefold from 2023. This data prediction strongly suggests that the demand growth for silver in the solar energy system will be extraordinary. The most crucial point is that solar-driven demand is remarkably resilient, even during periods of high silver prices, as manufacturers have limited flexibility to substitute without compromising performance and reliability. EVs require 25 to 50 grams of silver per vehicle, whereas traditional gas cars contain 15 to 28 grams of silver. It is estimated that 30 million EVs will be produced annually by 2030, based on the current development speed, while it was only 10 million in 2023. This speed will double the silver usage at that time compared to the current demand in the EV field alone. With the high development of AI, silver's role in semiconductors takes on new significance, as AI requires minimal electrical resistance and maximum reliability. AI server infrastructure represents a particularly silver-intensive application. A typical AI server farm requires 2 to 3 times the silver content of traditional data centers due to higher power density, more complex cooling systems, and greater interconnection requirements. The U.S. One Big Beautiful Bill Act, passed in July 2025, will provide more stage, space, and subsidies to AI development. The U.S. strategic goal is to challenge and surpass China's AI development, ultimately becoming the world's leading authority in the field of AI. China will do the same. This competition in the AI field will necessarily spur the extensive use of silver in semiconductors. Therefore, we can estimate the amount of silver that will be demanded in industrial applications based on these 3 aspects. However, this will inevitably further widen the existing supply-demand gap for silver, as it can be predicted that supply won't keep pace with the industrial demand in the foreseeable future. From the chart, it is clear that mine production decreases by 10% annually up to 2024. Why does it happen like this despite higher silver prices? This subdued supply response stems from silver's unique production economics. Only about 30% of annual silver production comes from primary silver mines, where silver is the main product. The remaining 70% is produced as a byproduct of mining other metals, primarily lead, zinc, copper, and gold. This byproduct status creates a significant constraint on the elasticity of supply. Even when silver prices rise substantially, production decisions at most mines remain tied to the economics of the primary metal, not silver. Additionally, exploration also has its limitations. It's not easy to discover a new silver deposit. Now, the average time from discovery to production exceeds 12 years, creating a significant lag in supply, even when prices incentivize new development. Now, the Trump administration has imposed significant tariffs on most of its trading partners, and these tariffs are unlikely to be repealed in the short term. This includes a 30% tariff on Mexico, which is one of the top 3 silver-producing countries and accounts for 24% of global silver production. The trade tension will necessarily disrupt the international silver supply and delivery. Beyond trade disruption, resource nationalism presents another challenge. Several major silver-producing countries have implemented or proposed increased mining royalties and stricter environmental regulations. These will negatively impact the supply and production of silver. Recycling provided approximately 193 million ounces of silver supply in 2024, representing about 19% of the total supply. While recycling increases during periods of high prices, structural constraints still limit its ability to fully offset mining shortfalls. The primary sources of silver are mining and recycling. The mining production, which accounts for a significant proportion of silver supply, is in decline. The recycling of silver also faces numerous challenges, making it difficult to improve silver output significantly. Under these adverse circumstances, trade tensions exacerbate the already tight market. So, in the foreseeable future, we can't see how the imbalance between increasing demand and insufficient and disrupted supply can be improved in a natural way. The only remaining solution to resolve the imbalance is for the silver price to continue rallying in the future. As for how far the silver price can go up, it will be challenging to forecast. However, there is an unchanged principle. As long as the imbalance exists, the silver price can surge. As long-term investors, our mission is to examine the relationship between silver demand and supply. However, the future is uncertain and volatile. So here, I must remind investors of some uncertain or volatile elements in the silver price rally process, given the current imbalance between silver demand and supply. In the silver price movement, a frequently seen phenomenon is the short squeeze, as shown in the chart, with the squared numbers indicated. A short squeeze typically involves a rapid price rise followed by a sharp decline in the short term. A silver short squeeze occurs when the price of silver rises sharply, forcing investors who bet against it to buy it back quickly to limit their losses. For example, on July 11th, 483 million ounces were sold short in a single hour on the COMEX, like in the chart. This is equivalent to around 57% of the world's annual mine production, a spectacular attempt at downward pressure designed to curb a bullish breakout. But the operation backfired. Prices rebounded above $37.50 an ounce. Silver is especially vulnerable to a short squeeze due to its unique market structure. In many cases, large institutions short silver to suppress prices or profit from a drop. But when physical demand unexpectedly surges and supply tightens, their short positions backfire. They're forced to buy back at higher prices, triggering a squeeze. At other times, speculative traders pile on short bets, only to be caught off guard by bullish news like rising industrial demand or falling inventories. With silver's small market size and high paper-to-physical ratio, even modest buying can cause sharp upward moves, creating the perfect setup for a squeeze. Everything is balanced. The quick price surge is also followed by a quick price fallback. Although a short squeeze can cause silver prices to spike sharply, the rally often fades just as fast. That's because the surge is driven by panicked short sellers covering losses, not by real lasting demand. Once the shorts exit, buying pressure disappears. At the same time, early buyers take profits, and latecomers often panic sell when prices start dropping. Without strong fundamentals to support the higher price, the market quickly corrects, leading to a sharp pullback. The short squeeze may easily cause panic among investors, especially retail investors, leading them to make emotional selling decisions and potentially miss a later opportunity. As long-term investors, our basic principle is that as long as a relationship of imbalance exists, where silver demand consistently exceeds supply, we should maintain our investment. Don't panic during the short squeeze like a roller coaster. If your technical skills allow you to and you find the silver price to be high in the short term, you can take a profit from part of your silver investment and buy it back when it falls. If you don't have sufficient skill, regardless of how the price rises and falls, as a long-term investor, you can hold the investment until the key factor driving the price up finally disappears. So, your mission is to review the necessary data to know the demand-supply relationships. However, with the increasing proportion of industrial demand among the silver dual functions, the scale of the short squeeze appears to be narrowing. As we know, in July 2025, the Trump administration team signed and passed the Tax and Spending Package Act. The act clearly demonstrates that the Trump team will advocate for and support traditional internal combustion engine (ICE) vehicles, while reducing the tax credit and subsidies for EVs and renewable energy. This will bring uncertain elements to the U.S. EV development, production, and sale in the U.S. and the global car market. Currently, the largest EV and renewable energy markets are the U.S. and Chinese markets. If the U.S. returns to traditional car markets and abandons EV and solar R&D investment, this may lead to China's EV production and sales going into a deadlock. After all, China excels in production, rather than investing a substantial amount of money in research and development for EVs. Furthermore, the current Chinese economy is experiencing a significant decline, and the Chinese EV market is facing severe domestic competition. The price war between companies is escalating. This situation has already threatened the survival of many Chinese EV companies. The adverse situation may prevent the EV's outlook from reaching the predictive result as above. Thus, silver demand may not be as strong as previously forecast. Hence, the fundamentals supporting the silver price rally will likely become weak. So, this point also needs to be scrutinized by the investors. In general, although there are uncertain and volatile elements that may disrupt your investment, silver has a prosperous future due to the imbalance caused by strong industrial demand and limited supply. As for how far the silver price will go, I can't give a definitive answer. But the imbalance may persist in the long term, and this imbalance will lay a strong foundation for future discoveries of higher silver value. However, in the investment process, we must closely monitor the primary driver of the price rally. As long as the data indicates that the driver will gradually disappear soon or no longer exist, that will be the time to take a profit and exit the silver investment. Alright, these are the contents of today's video, which analyzes whether it is just the beginning of the silver price rally after it broke the 14-year record. I think you should already have a clear picture of it. If you learned something today, please give this video a like, subscribe for more beginner-friendly content, and share it with others who may also be interested. Do you have questions or thoughts about silver? Drop them in the comments. I'd love to hear from you. Thanks for watching. See you next time on Financial Path.